All right, potential shift here. It is Thursday, December 11th at 11:21 a.m. I'm here with my co-host, Annika. Hello, how are you?
Hey everyone, Annie here. Doing great, thanks. Just happy the tech's behaving for once. Market's been a bit of a tease this morning, but we're rolling.
Yeah. The tech has been a little bit of a pain, but whatever, we're here now. So first things first, yesterday was a Fed meeting. Powell giving out some mixed messages yesterday, all right? So on the one hand, he was hawkish about rates, saying rates sort of look good where they are. We might hold them where they are in the short term. On the other hand, he also announced some QE. He said that the Fed will begin expanding its balance sheet and buying back bonds at a rate of $40 billion a month, I believe. So that's extremely dovish. So we've got really we've got a mixed message here from Powell. And I'm going to tell you what I think of that. I find it a little disturbing because I think on the one hand, Powell is still worried about inflation, so he's keeping rates where they are. But on the other hand, there seems to be perhaps a liquidity issue, which is why he has decided to expand the Fed's balance sheet and put a little more money into the economy. Now, this is kind of scary on two fronts. I mean, it's scary from the inflation side, obviously, but even more concerning is, why does Powell feel the need to inject liquidity into the economy suddenly? I mean, and liquidity is the L word. That's the big deal. I mean, that's the one thing you don't want to mess with. That is what causes market crashes. That is what causes problems and financial instability. So if he's feeling the need to tweak liquidity, that's really kind of a bad sign. Now, on the surface, when he first announced it, the market went up because, QE is good. It's good for the market. But if you think about it a little more and dig a little deeper, it's kind of disturbing that he feels the need to introduce liquidity here. So that, on top of the fact that there was a Venezuelan oil tanker seized overnight, has made me pretty bearish for today. So I've got a bearish play in. As you can see from the charts, we opened at 685, dipped down to 682 down here. I caught that move. I got out at around 682. We bounced back up all the way up to almost 687, which at this point, I was starting to look at the chart and saying, hey, the technical indicators are telling me this might be a bullish day. I might be wrong. But then we dipped back down. And you know what? I'm going to stick with my initial bias here, which is bearish. Let's see if we can go lower here, because I feel like yesterday's Fed was really particularly negative. Plus, you've got the tanker. Plus, you've got Oracle earnings, which the market did not like. So there's a few reasons to be bearish here today. So that's my tilt. That's my bias.
Yeah, I hear you. Powell talking tough on rates but then drops $40 billion in bond buys like, hey, just kidding about the liquidity? That's textbook spooky. It's like he's saying, inflation's fine, markets are fine, but oh wait, everyone's about to panic, so let's sprinkle cash. And that tanker? Oil's already twitchy. Oracle earnings tanking after hours? That's the market whispering, no thanks. Your bear bias makes total sense. We're not chasing bulls today, we're fading them. I'll watch that 68.2 level like a hawk. If we tag it again, I'll hum the Jaws tune real soft, because we're about to bite back.
All right, I like that. I am going to be fading bullish moves today. I do have a bear bias here. First bias in a few days, so I'm happy to be back in the market. So, like I said, we caught this initial move downward. We exited basically at the bottom, so that was a good play. We made about 120 bucks on that. Then we bounced back, which wasn't unexpected. That's why I got out. I mean, the RSI had gotten a little too low. And you know what? This up move strikes me as the algos trying to flush out weak bear hands before there's an actual move lower. So I didn't buy it. Once we started to show a little weakness right about here, I got back in short. My upside out is, well, I mean, my losing out on this short position is about 686.5. I got short at about 686. My target is down here at around 682, the daily low. So yeah, basically, my losing exit is the daily high. My winning exit is the daily low. So, you know, if I entered at 686, it's 686, and my losing exit is 686.5. My winning exit is around 682.5. It's good risk reward. And it shows on the chart here. I know you can't read it, but my losing side is a $37 loss. My winning side is a $162 gain. So very good risk reward here. Again, a bearish bias. That's basically what I'm betting on. Let's see how it plays out.
Yeah, that's a sharp setup. $37 risk for $162 upside. That's what I call asymmetry in our favor. The daily high is your stop? Perfect. Because if we punch back through 68.6.5, the algos win and we just eat it and move on. If we sink to 68.2.5 though, we're the smart ones. I'll watch the tape like a bodyguard. Any fake spike above 68.63 and I'll mutter trap under my breath. RSI drops below 40 and VWAP starts sloping negative, then I'll start counting ticks with you. No emotions, no greed. Just clean, spooky Fed money. You good?
Yep, I'm good with that. Yeah, this was a good setup. Yeah, we basically broke up to this daily high, which was also the pre-market high, more or less. So it kind of struck me as a top anyway. Then we got a little confirmation when it came back down. That was enough for me to get short, because I do have this bearish bias. So yeah, if we break above or even really approach the daily highs at this point, I'm done with this move. You know, hey, can't be right all the time. But if I'm right, I think we're going to go back down towards daily lows here, maybe even break them. But you know what? I'm not going to get greedy. If we come close enough to the daily low, I'll take my profit, and that's it. There is one issue. It is 11:30 now. So, you know, I'm not a huge fan of trading during lunchtime, which is noon to 1 p.m. Markets tend to get choppy, algo dominated during that time. I've still got half an hour until then, so let's see what happens. I may have to rethink this play come noon. You know, hate to abandon it. We'll see. We'll see what the market's giving us at noon, but I know come noon, the algos are going to take over the trading, and they may very well bounce me out just on low volume because they can. So, yeah. I feel like I've got a little bit of a timer on this one, and that timer is running out. So, you know, I could take profits here. I mean, I am up $20 on the trade, $30 on the trade. Not ready to do that yet. Not at 11:30. Maybe at 11:50, you know, when basically all of my gains have vanished. But we'll see. We'll see. Any thoughts on that, Ani, before we sign off here?
Yeah, lunchtime chop is real. Algos love to fake us out when volume thins. I wouldn't bail just yet, but by 11:50, if you're still sitting on 20 or 30, think about locking half. Let the other half ride to 68.2.5. That way, you're not walking away empty, And if it reverses, you still catch the tail. Either way, I'm right here. I'll give you the heads up if it starts looking suspicious. See you at 11:50, yeah?
That sounds good, Ani. Unfortunately, I only trade one contract, which really does kind of limit me. It's kind of a risk management thing at this point. I do wish I was trading two contracts, because then I could do exactly what you said. But then again, that would introduce a whole other variable of sizing. I like to keep my size to one contract, period, end of story. It just makes things simpler. But we could do a whole video on that. All right, so that's the situation right now. We'll come back, see if anything changes. Potential shift here. Don't go broke. Good luck, guys.